The first company is Heliostar Metals. The CEO, Charles Funk, is going to walk us through it. I think Heliostar, which has had some selling pressure for the last 2-3 weeks, is really well priced. I mean, I think it's a great deal at the current price. You can't fault Charles and the rest of the management team. I mean, they hit their marks every time. I mean, a year ago they laid out, this is what we're going to do in this order, and they met or exceeded pretty much every one of these benchmarks as they've gone through the year. Project looks fantastic. I don't know why whoever's selling is selling, but personally I think it's something you should take advantage of, and Charles is going to tell you why.
Thank you very much, Eric. I think, the most important thing to me to start with an introduction to Heliostar is that our approach is very different to most of the companies here. We want to build a mid-tier gold producer. We will be making forward-looking statements. I think that's quite a differentiating factor, especially in a market like this, that outside of extreme discovery stories is not getting value. There's two proven pathways to create value that I think are very well established in this industry. And the first is that discovery pulse at the beginning end of the Lassonde curve that regularly then falls into the Valley of Depression as people take a long time to study, permit, and bring assets into production. And then that growth out of that into production is one of the most proven wealth creation tools in this space. And that's precisely where we sit with Anapola today. I'm very confident that it'll be the next major gold mine in Mexico. I don't know an asset that can beat us into production, and it's going to be a very high-grade gold asset, as I'll attempt to introduce. So Anapola, we updated the resource. Very high-grade, wide ore body that I'll show in detail. We have permits for open pit mining, but we rescoped it last year. We think this is a high-grade underground gold mine. We paid $10 million down and we'll pay $30 million total for an asset that's had over $100 million spent on it. So it's a huge advantage of us to accelerate quickly to production. And that speed, I think, is as key as the grade in the business proposition of Anapola. And so today we stand with 184 million shares out, 40 million market cap, a very strong institutional shareholding, although maybe one of those isn't as strong as we'd hope over the last couple of weeks. We think that we have a very strong from the institutions, including Franklin Templeton, Adrian Day, Eric Sprott, from the analysts and the coverage that we've started picking up last year. People are realising that the speed at which we can progress is moving us very quickly into that developer category. And to speak to that, we added two very significant people to the company very late last year. Greg Bush has joined us as our COO. Greg has a long history, typically a company of our size probably doesn't get access to people the quality of Greg, other than he worked in Guerrero and he fell in love with the potential of the profitability of Anapola. And so a long history at Capstone Mining for 9 years, and then most recently the GM at Los Filos. So a mine builder who's done this multiple times, who knows the jurisdiction, has significantly bolstered our team. In addition, Barry Murphy's just joined at the board level, another mine building executive that shows the seriousness and the calibre of team that we needed to build to put Anapola into production. And so why I'm optimistic about Anapola is simply showed by the drill results that we put out last year. You can consistently pull out 50 to 100 metre wide drill holes across the ore body going 5 to 15 grams per tonne gold. There's very few ore bodies in the world that average, the width of this room at 5 to 10 grams per tonne. That will, those grades over those widths is the key to profitability in underground gold mining, and that's what we will be in production in 2027. And so we're located immediately northwest of Torex. Torex was the 10th biggest gold mine in the world last year. If you want to look at what the gold endowment of this district is, I think this photo shows it as well as anything. In the far distance, you have 15 to 20 million ounces combined mine reserves resources. Only 20 k's away, you have another 10 to 15 million ounces. And Anapola, which is only the top of Anapola has really been well understood and has huge perspective beyond our resource update. But we're in a gold belt that has to be one of the most endowed, least explored in the world, and we have two major mines within spitting distance of the project. If you look at the infrastructure that $100 million bought, the camp, the facilities, a 400-metre decline beyond the portal you can see there, the permits, we own 100% of the surface rights, or we have 30-year access agreements on the areas that we don't own. The replication value of that is more than our market cap today, I'd argue. And so the resource that we put out was a change. Previously, the focus on Anapola had been the open pit potential. We focused on taking it and mining the underground, ignoring the big sea of low grade and taking the real economic heart out of this with an underground mine. With the topography, it's unusual. It's one of the few mines in the world where underground is going to be a lower capex approach than open pit. And you can see the edge of the decline on the right of that graphic, and you can see the grades there. Everything in pink's above 5 grams, everything in magenta's above 10 grams per tonne. A very consistent, coherent zone. The measured resource is just short of 9 grams per tonne. The measured and indicated average is 6.6. If we zoom into the core of the high-grade panel, you can see that there's a 200,000 ounce subzone that's grading greater than 10 grams per tonne. That's precisely where the mine's going to start, and that, we believe, when we do our PEA this year, is going to drive very high free cash flow early, which is going to give very quick payback for the project. You can see here in a plan map the footprint of the resource as you go from the measured category on the left to all categories on the right. You can see the confidence down below, but one of the most exciting things is we're sitting there with that 1 to 1.2 million ounce global resource. I think there's a very clear pathway that we can grow that to 1.5 to 2 million ounces, grading better than 5 grams per tonne with follow-up drilling this year. The updated resource that we'll put out this year that'll feed the feasibility study next year. One of the things that we're most proud of as a company is the cost at which we could deliver those ounces. Major mining companies are looking at $50 to $100, thinking that's a great outcome for discovering gold ounces. To discover an ounce for $16, either directly through the acquisition cost, or if you look at the whole project that we bought and ounces we added, turned out to be a very similar number. That's a very efficient use of capital, and it has to be in markets where your cost of capital is high. And so we laid out this rescoped plan, and as Eric touched on, I'm very proud of the fact that we delivered on all the things that we said we would. The drill program, the met work, bringing ounces forward and getting the resource out ahead of time. Now we look forward to 2024, and we're going to deliver a PEA this year. We're going to do the resource update, where we're guiding that we think 1.5 to 2 million ounces is possible. And then that's the resource that we're going to take through feasibility and make a construction decision next year. And we believe 18-month time frame, 3 years that we can be in commercial production. I'll skip through these for time because there's a little more I want to talk about the growth targets and then how the speed impacts the profitability of these operations. So what you can see in this plan map is the portal and the infrastructure on the right, and you can see where the high-grade panel at the core of Anapola is. 280 metres long, 50 to 60 metres wide, 100 metres tall. We've been able to find a series of new zones around that where we think the resource growth can come from. We think there's additional ounces around the high-grade panel that our drilling this year will bring on. We also found the parallel panel. immediately to the north. It's an area that hadn't been drilled on the right orientation, so wasn't understood. And we've drilled some excellent results. 38 metres at 7 grams, 147 metres at 4, of which 16 at 11's in the parallel panel. We think that there's 100 to 300,000 ounces that we can bring in by drilling this off this year. We know that this is open at depth. We don't know how big Anapola can become. We're talking about a district that produces 10 to 20 million ounce deposits, and we've got a lot of depth potential. It's why putting the decline in would be so valuable for us, because we could use that as a platform to grow the expansion zone at depth, which is open. Lastly, we've got all these parallel zones at the north that previously this east-west structure wasn't understood. We think by drilling these on the right orientation, we've got the potential to bring even more ounces in to further grow what's a very robust resource at Anapola. But I'd like to close today with why an asset moving to production quickly matters. If you've got an exploration project or a stalled out project that is 5, 7, 10 years into the production, there's a huge destruction in the value of that. And so the chart on the right, to be very clear, is hypothetical. It's not us modelling Anapola. We're doing the PEA to demonstrate there's economics this year. But if you look at, in the blue, an NPV 5 environment, and in green, an NPV 8, a more realistic environment, and you look at the present value of a project that goes into production 3, 5, 7, or 10 years from now, you see the same project delivered 7 years later is worth half as much as that project delivered in 3 years. So if you find your favourite gold project, your favourite discovery, or that you know is a long pathway to production, you've probably got an opportunity to move out of that into these assets that are going to production quickly, get that re-rate that comes from taking the risk of developing it, to financing it, to putting into production, and then moving back into that producer. So that, to me, is why the speed at which a company can move is such an underrated view of why you should buy these assets. We'll lay out a plan next week of exactly the deliverables that we'll deliver in 2024. They'll include the PEA, looking at test mining, and this resource update. So please come to our booth and we'll answer any questions you have about Heliostar's next 12 months.